Well, this is the result of 5.5 years of hard work. Commodity prices are much lower than they were when we came into government. I mean, just to pick the iron ore price, for example, that was at $120 a tonne back in September 2013 when we came into government. We are basing our revenue forecast on an assumption of $55 a tonne today. So obviously, when you make more prudent and more cautious assumptions in terms of your revenue forecast, obviously, you give yourself a better chance to outperform your expectations. I mean, the situation we inherited from our predecessors, they expected the best, and of course, we're not able to deal with some of the downsides. The truth is, we inherited a weakening economy, rising unemployment, and a rapidly deteriorating budget position. Today in Australia, the economy is stronger, the growth outlook is better, employment growth is stronger, the unemployment rate is lower, and the budget is in a stronger and improving position.
Okay, let's talk about the growth expectations then. As I mentioned, 3% over most of the forward estimates. Yet when we had that Q3 number just a couple of weeks ago, we saw the year-on-year growth level below 3%. There are some economists that we were speaking to who suggest that perhaps the second quarter of the year was going to be the peak when it comes to growth in Australia. So how confident are you that we will be able to see 3% growth over the next 4 years?
Well, we're optimistic. I mean, obviously in 2018-19, we are dealing with the impact of a significant drought, which is having a material impact on our expected agricultural exports. So that is fundamentally a function of that. But our expectation is for growth to return to the 3% level from 2019-20 onwards. And if you compare Australia's economic growth right now, internationally, we are obviously performing more strongly than the OECD average, more strongly than any of the G7 economies, with the exception of the United States.
So let's talk about wages, because we often, when we chat to you at budget time and at MyUFO, talk about wages and have, of course, been pointing out that they've been stubbornly low. It's just not an issue that's peculiar to Australia. It's something that we're seeing in a lot of economies around the world. I know that you were just at the G20 meeting in Argentina. What was the message there? What are other finance ministers trying to do or hoping to do to try and pick up in wages, which we want to see globally?
Well, wages growth in the US has picked up, and we're seeing wages growth in Australia pick up. I mean, the truth is, when we're dealing with a weakening economy and rising unemployment, as we inherited from our predecessors, rising unemployment means that wages will be lower than they otherwise would be. But under our economic management today, with the unemployment rate coming down to 5%, that is the ingredient to drive stronger wages growth into the future. And we've already started to see that. As excess supply in the labour market continues to reduce, we would expect wages growth to continue to increase into the future.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.